How's it going, guys? This is Forensic Forex with Deontay, and I'm back in another video. This is your daily update on crude oil. As we can see today, January 3rd, Wednesday, we got that lower swing high confirmation here. So we have that completion of the bearish trend formula. We can anticipate shorts to come into play. However, I like to be not overly optimistic to the trend formula because other things could be at play. Right now, we have geopolitical tensions going on in the Red Sea. As recent news has shown, there is some supply disruption going on, and we can see that if there's supply destruction going on, that means supply is going to be at risk and demand is most likely going to come into play, which is what they're supposedly saying on headlines to why crude oil went higher and the spot price per barrel is going to go up. So if demand does go higher and supply goes down, we are going to see that directly related to the price action. So if price is going to continue to trend higher, I like to be open-minded. If I am incorrect in the price going lower, I want to see how would the market makers most likely turn this around and how are they positioning themselves to go long. And one way I would say is that they're creating a higher correction. You're creating a swing low that is higher than this one itself, but they're creating a swing low formation below January's opening price in a discount. So that means if potential possibilities Thursday does not break down and take out that low, and instead we get an up day or a day in general that doesn't break the low, we have a swing low formation. And if price continues to trade higher, it would break this swing high, pulling back in bullish momentum. So completely opposite to the bearish trend formula. We'll be looking at the bullish trend formula. So price continuing to go higher then. So that's just a scenario I'm thinking about. As always, the first week normally is going to be the trickiest because of NFP. So normally I would advise traders not to trade the first week, especially if you're not experienced. Don't trade the first week. However, if you're just reading the price action, go along steady. Do not rush into it, but do understand it's still the beginning of the year. This is only the first month of the year. So things can be very manipulative at the beginning of the year. So take your time and read the price action, especially on the higher time frame. And keep it simple. If this market's going to go lower, it's most likely going to go lower after an update, and I go short. That's what I would do now at this point. I would prefer, if it's going to continue to follow the bearish trend formula, for price to take out the previous daily low. I don't want it to take out the previous daily high. Another scenario that can happen is price could look to be going back bullish, but only is running above highs or running a swing high for a buy stop raid to continue going lower. That is another scenario. Or, like I said before, price is creating a swing low to go up here, create the bullish trend formula or to bring in bullish momentum and then create a higher swing low to continue going higher to potentially reach for what? If they'll look back 20-day high here. And if we do get to the if they look back 20-day high, we could have reasonable ideas that price could go from here and then come back down short. If not, if the bearish trend formula does continue and we reach down to the 20-day low, we could potentially find ideas for it to go back long again. So just being open-minded and being optimistic, because traders like to be really concise and have strong convictions about where the market's going to go, when in essence, anything can happen. As you can see, we're trading crude oil, things like a supply disruption on the delivery on oil can definitely impact the direct price of barrels. So that's something to keep in mind. Hopefully this is insightful. Please be safe. Do not trade NFP. Do not try and be a hero.